Well, good afternoon. Good afternoon and welcome. Welcome to another of our webinar Wednesdays, managing your small business through the pandemic. This is version number 78. Good afternoon, I'm Kelly Bearden. I'm the director of the California State University Bakersfield Small Business Development Center, and I will be your host today. And September 8th, we'll be doing and looking at a lot of the issues like we're doing now on a monthly basis. We'll be looking at a lot of the issues dealing with the remaining pandemic relief programs, a lot of the things out there as far as managing these programs all the way down to the bitter and very end of it. So let's get going. So what's up today? Today is September 8th. And as I mentioned at the beginning, we're going to do a deeper dive than we normally do these days. No guest speaker today. You're stuck the whole time with me. If you have questions, let's use the question poll today, the Q&A box. If you have chat, we'll have Maureen working behind the scenes, putting some forms and other information in the chat. Thank you, Maureen, as always, for being on. For number 78. I'm a little ahead of myself. So what's up today? Well, we're going to be talking a lot about EIDL today. And there's some good things going on with EIDL. Big things going on with EIDL. It is open, growing, and maybe your last chance is coming up. So a look at EIDL. We're looking also a little bit at the Delta virus, and it's threatening our economic recovery. The earned income tax credit, as I referred to it as forever, I've dropped the T now. I'm going with common belief that there's two acronyms for this, and if there is, I'll take the shorter one. So let's go with the earned retention credit. So the employee retention credit, I'll get it right eventually. And we'll look at some of the eligibility and some of the changes that are going on with ERTC as we get some guidance in the past month from the IRS. We've got a few other things that are kind of hanging over it right now, but we'll look and see where we are today. One thing we've known and learned over the 78 weeks is that we know today what we know. And of course, that might be changed next week or the week after. So we'll also get into a PPP forgiveness update. We will look at that. And, the SBA came out and said that we want to do our part to get these loans forgiven. And they have created their own forgiveness portal that many banks are using. Many aren't, but we'll kind of look at what's going on with forgiveness and give you some guidance on the forgiveness aspect of getting rid of your PPP loan and turning it into basically a PPP grant. The California Relief Grant Program is open again and has programs to kind of work with, I think we're on number 7, 8, and 9 that are coming up. So we started back right around the first of the year, December 30th of 2020 with round 1. And have blossomed on and off since then. We've had the wait list and things like that, and we'll get into a little of that for those of you that haven't had the opportunity yet to apply and receive funding through the California Relief Grant Program. We'll get in depth this week, and we'll get into a lot of your favorite programs and maybe your least favorite ones. We'll talk about that too. We'll take your questions, and I'll try to answer all your questions. I try not to confuse myself with the changes that have already happened in all these programs. I was thinking about that this morning when I thought about some of the rule changes that have gone on, from an 8-week PPP to a 24-week and everything else in between. That roller coaster that we keep riding thanks to good old COVID-19. So your questions, and let's kind of stop things now and let's do a poll. So jumping into the poll, I mentioned we kind of got a big dose of EIDL and a lot of things going on with EIDL. So we're going to lead with that with the poll today. And before I launch it, I'm going to set it up for you a little bit. The first poll will have 2 poll questions. This first one will be 3 parts. It is going to be based on you receiving a EIDL loan. And then we'll have 2 follow-up questions below that you can answer. The first one's going to be a multiple choice option to where you can choose multiple choices for it. And let's launch it and go ahead. But the first part of this question is, I received the following EIDL loan. It would be COVID-19 EIDL loan, which is the main loan program. last year's EIDL advance, this year's targeted EIDL, or the 2021 supplemental targeted EIDL that's out, or there were no EIDL loans for you. So that's the first part of that question. So we might have, so again, 3 parts. And if you received an EIDL loan, did you receive the EIDL, the advanced, the targeted, the supplemental, or no EIDL at all? And then if you did, if you applied in 2021 for an EIDL, part 2 of this question. So if you applied in 2021 for a new EIDL, or if you were looking for a reconsideration. So if you're looking for an increase, a reconsideration, it could have even been the targeted EIDL for 2021 or supplemental. Just 3 questions on completed and it's funded. It was denied, or it is in reconsideration process, or I have not heard yet. And then the last one would be, how would you rank the SBA with their EIDL process for those of you that have gone through it? And you're given a choice of 1 to 5 stars. Now, just to give you a little background on that, the last 2 questions were an internet poll that I saw this week that had over 3,000 people respond. And we'll just see how our experience was compared to other people. So the end of question number 1 is, I received the following EIDL loans. And it looks like there's about 36% of you that received EIDL loans, which is a little higher than I was anticipating. But we're going to go ahead and end these polls and then go through them. So let's end the polls for the EIDL portion of today's polling. And in the poll, and we will share the results with you. And there you go, 75% of you have received or applied for, those that actually received an EIDL loan. So that would be 75% of the 36 that had received the EIDL loans in this. Half of you also received the EIDL advance, the targeted EIDL, the supplemental EIDL, and a few of you no EIDLs at all. So thank you on that. So getting with our last 2 parts of that question, what is the status basically of your EIDL 2021? You're given a single choice on this. 42% of you have not heard back yet. 33% are denied or in reconsideration process, and 25% have been completely funded. And that is remarkably fairly close to the other one that we saw. Or actually the national results, the national funding, which had 25% completely funded, 50% were either denied or in reconsideration, and another 25% hadn't heard back yet. And also, out of 4 out of 5 stars, half of you would give the SBA for this process, 4 or 5 stars, and half of you would give them between 1 and 3. Now, with that other poll that I saw, 80%, it's the great Pareto principle, 4 out of 5 dentists recommend, 80% said they would give them only 1, 2, or 3 stars, with only 20% nationwide with the 4 or 5 stars. So I like that. I like that ours is considerably higher. It makes me feel that maybe more information is good. If more information is good, we're going to have plenty of it today. Okay, so that's the end of that poll. Let's stop that share and show that. And then let's go a little whimsical with number 78. A question that really could be the dumbest poll question that I've asked so far, but I wanted to tie something back to 78. And I agree, 1978 was a fantastic year. For those of us that were around then, great year, but didn't really want to go there. So sticking with our financial theme, I decided to go with something called the Rule of 78. And that is a method of calculating interest on a loan. And my simple question on the pop quiz portion today is that benefit those that are paying over the entire term or benefit those that want to pay the loan off early? Again, the wonderful Rule of 78. probably a very obscure, when you have annual percentage rates, APRs that you see all the time, and simple interest. The rule of 78 is a method that, well, you'll find out in a second. Right then we were at 50-50, but now it's starting to change a little bit. Who does it benefit? The rule of 78 method of calculating interest, those paying over the entire term or those paying off early. And the whimsical pop quiz part of today's webinar Wednesday is going to end. I'm going to end that poll and show you it right now. Share the results. The results have 53% of you believe in payoff early. Well, it's the 47% of you that are correct, and that's paying over the entire term. And so essentially what the rule of 78 method of calculating interest is, for webinar 78 today, it's a method to where you pay back more interest early on in the loan. Now, over the entire term, you would pay the same amount, but more is paid off earlier and less later, rather than our annual percentage rates that we see or other ways of calculating amortization and paying off interest. So, okay, again, not my best question in the world, but it gives me something to aspire to next week. So let's get back and reshare our PowerPoint presentation, which, I don't know what happened, but I had to stop sharing in order to do the polls a few weeks back. And so now I'm doing that. So just going on with our status and action items that we have done for much of this year, just kind of an update of where we are today with a lot of the loan programs and grant programs and tax credit programs that we have. EIDL is open. It ends on December 31st, 2021, or until funds are expended, I would assume. And they are open for increases as well. And remember, your EIDL basically is worth, if you received an EIDL, it's worth 4 times more if you go the increase route, because of 6 months compared to 2 years is the term of what the EIDL's open for. We have the employee retention credit, and it is open for 2020. 2021, officially, it ends on 12/31. It could be ending at the end of this month, depending on how the bill for infrastructure goes. If it's passed by the House and signed by the president, which my crystal ball doesn't even works great except for everything but politics. So let's just say today we'll say maybe 9:30 with a question mark. Maybe next week it'll be 12/31 again. EIDL Advance is open along with the supplemental, California Relief Grant, PPP Forgiveness. Remember, those are due 10 months from the end of your covered period. So you basically go back to the end of your covered period, which for most of us is 24 weeks, go 10 months forward, and we're seeing a lot of those 2021s that are coming due and are due now. And one of the more unique situations that I saw recently was somebody got a 2021 PPP second round, second draw, actually forgiven before their first was forgiven, which I thought was kind of unique and different, but it can happen. And both were forgiven to the satisfaction of the borrower. So that's good news. So also we have our family lead tax credit. We talked a little bit about that last week, the Bakersfield Grant program. The PPPs are closed and we got forgiveness ahead, and that's about it. The shuttered venues are open for supplemental. If you received a shuttered venue grant, you can receive up to 50% of that. It is closed to new applicants as of a couple of weeks ago. Of course, the Restaurant Revitalization Fund is closed. The portal is closed. You had to get in on that first day, and then still many of you that got in on the first day did not receive funding for that. And look at that, the pandemic unemployment for contractors and for others, ended on September 5th. So obviously we're still having problems with getting our recovery back with this Delta variant and this COVID problems. And really shocking was the job numbers for August. Boy, they came out, I think, over the weekend, and down substantially. I believe economists had predicted maybe 750,000 jobs, and there was only 250,000 that were actually created in the month of August. Doesn't bode well for a lot of people that are looking for work now. If those jobs are not becoming available because businesses are reducing hours, or if they're closing due to the recent day COVID problems, then it's not good for anyone. So maybe that'll take care of the job shortages that we have, but they're still out there too. Other COVID problems, starting to learn more from employers about some vaccine, mask, and politics that continue to upend workplaces. A lot of issues when I guess you put vaccinated with unvaccinated, mask with unmasked, and throw a little dose of politics on top of that. And that's what you end up with, an upended workplace. COVID, please go away. That's my editorial comment for this week. It's been not fun, go away. And we also saw last week, Stanislaus County is the first in the San Joaquin Valley to retreat to indoor mask policies again. So it's going to be interesting if COVID continues bad and gets worse, and we get past a certain election this month, what we could be seeing later in September, but I will not speculate on any of that. So a lot of today is going to be about really managing your pandemic relief. And it's kind of, the first thing is really, there's a lot of unique borrowers. Everybody's situation is basically different, or can be different. So really what I get to see is your situation is very specific to you. I see a lot of unique different situations, but the important thing is that you analyze your situation, your own particular situation, and start looking into what you need to know and what you need to do. And that's knowing the timelines and knowing what to use for program funds. I've talked to several people who have one pandemic relief program, and some people who have been on this webinar have multiple. And when you have multiple, oftentimes those funds do not work well for being used for multiple programs. Each dollar needs to be spent basically on its own program. So knowing the timelines and what you have to spend, and then understanding the program funds and where they go, is essential for managing effectively your pandemic relief programs. We'll look into this a little later, but trying to manage some of your 2021 programs, such as a PPP 2 draw, maybe you had an EIDL increase this year, and maybe you have the employee retention credit, the ERTC. So, and what your goal is, of course, is to balance those expenditures across those 3 programs for a maximum benefit. And there are plenty of resources available to help you. I know this is getting confusing because after 78 weeks, I'm just getting more confused too. But hopefully we can take care of some of that today. So let's start with EIDL. Let's start with some of the changes and some of the things going on with EIDL. I'm going to make an aggressive stand here to make sure you know I'm still here. But let's look at some of the EIDL changes, and hopefully sound and everything stays good. So as far as the EIDL loans, the biggest change I think for this year was when the SBA went away from a 6-month EIDL period to a 24-month. A lot of things when this pandemic started about almost 18 months ago now, a lot of things happened that we thought this was going to be a short pandemic. We saw covered periods for the PPP being 8 weeks. But when SBA came out in March of this year and said, you can actually get a larger EIDL now, and we don't consider it to be a 6-month term, we consider it to be a 24-month term, gives you 24 months to spend over that particular time frame. And one thing, EIDL has been one of the preferred, I know you have to pay it back, but as far as providing that security blanket and that, you don't know how long this pandemic's going to last, because we just don't. And if we're still talking about this in another 18 months, are there going to be pandemic programs available for people? Is there going to be money that there has been flowing as easily? So the idle increase and taking it over a 24-month period with some of those expenditures going into next year, I think is very, 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 very monumental change for idle. idle also deferred the payment until next year. Now remember, the backside of that is if you do have that security blanket at that idle program, what you also have is you have interest that is accruing on your idle loan. So whereas the payment is deferred, your 3.75% is still accruing. And so you need to remember and look at the cost of what that idle is costing you. Remember, to take out an idle was very inexpensive. It was only $100. And that was to do a UCC filing. But there are other issues that come up with that. The targeted idle and supplemental grant were introduced this year. Also, the infrastructure bill, if it is passed and goes through, it takes $30 billion in idle and targeted advance away. And those are funds, by my latest calculation, I show about $104 billion left. And we've been going through about 5 or 6 billion a week on average over the last month or couple months, probably. So you see that there's plenty of things that are moving on. The idle maximum loan increased from 150 to 500,000. And in a few slides, you're going to see what is looking like an idle increase to 2 million. And that is going to really suck up that $100 billion that's left. So really, I'm almost to the point where I'm extending a last call for idle, at least the way it looks right now. If the funds are taking for the relief bill, for the infrastructure bill, and also a bunch of smaller businesses that can apply, I think of a lot of businesses that are away from our typical small businesses that have 100 or 200 employees that are under the 500 employee limit. That 2 million is really something that they need and really have needed all along. So there it is. Idle's going to 2 million, question mark. SBA is widely expected to lift the cap up to 2 million. As we have mentioned a few times, we first heard this directly from SBA about 5 weeks ago and maybe 6 weeks ago. And it was something they were exploring at the time as idle funds were still available. And some of your bigger small businesses were really not doing much. 150 was a drop in the bucket. So this was a way to really help those businesses that have been going through a lot of the same struggles as small businesses that maybe received a smaller amount. So going up to 2 billion, if you recall, it was at 500,000 in late March, I'd say from March 12th, I believe the first idle, March 12th, 2020, till about the end of March. And then in April, it was dropped back to make it available to more lenders. March 21 came back, and it looks like this month it's going to be increased to 2 million. So, and traditionally, it has been a $2 million idle. The economic injury disaster loan for other disasters has been $2 million, and it has the same terms as far as interest rates of 2.75 to nonprofits and 3.75 for profit businesses. So some of the things to look at if you are considering doing and looking at that potential $2 million idle, or somebody who is that, again, it's going to be based off of gross profit from 2019. Of course, that's your total revenues minus your cost of sales, less any other idle you've already received. It's not clear yet on if you need to prove that you have an economic injury. This is, of course, the speculation part to where we're trying to think. It's like when the idle went from 150 up to 500, you could see subtle changes in the portal that some borrowers and clients were getting back to me telling me that it was easy to apply and go from 150 to 2 million in the portal. So right now, it's not clear on if you're going to have to demonstrate a financial loss or if you're going to have more collateral. Typically, large loans of those sizes are underwritten, and being an underwritten loan, then those guidelines from SBA generally have in the past involved the pledging of security or collateral for those larger loan amounts. If you'll recall, on EIDL loans now, it's loans under 25,000, collateral is not required. Over 25,000, a UCC filing with the Secretary of State's office is done. And, that can be a problem later on if you're looking to maybe either refinance other debt, if you're looking at taking on additional debt, that could be a problem that you might have to address later on down the road. So one thing I have been watching is the number of EIDLs and the amount. Kind of got the amount that Congress appropriated. That's where I came up with my 104 billion that's left. 104 billion.4. So we're up to about 262 billion of the 367. My calculations based on $2 million EIDL loans, all that would get sucked up with 53,000 businesses that apply and actually successfully get a $2 million EIDL. So, and remember, we did talk also about the infrastructure bill that was passed. And just, on that, here is my reminder to tell you that I did talk to you. Our last two poll questions, again, only 20% gave the SBA 4 or 5 stars on that poll. And we were 50%, and pretty much 25% of you 50% and 25, where we were pretty much along those lines of those that had been funded and those that were in reconsideration or denial or had not heard yet. So I wanted to make sure I didn't skip that on you. So mentioned the under 25 are unsecured. Other ones have a UCC filing. That was the $100 loan fee that came to that. Always you want to check your LANA, which is your loan agreement and authorization. And you have signed one and you have one, and it is pretty explicit with the terms of your loan in there. The proceeds do need to alleviate economic injury, and you really need to maintain those paid invoices, checks. You can't use or relocate your business without consent. I like this one. Funds are for American-made products only. And in there is really kind of something unique that says loan increases must be requested within 2 years of your LANA. This is an issue that came out and really kind of startled a lot of people. After the initial EIDLs, SBA came out and started asking for evidence of either a hazard insurance or liability insurance, and that covered 80% of the insurable value. In the rush to get all this money out in 2020, that was done after the fact in many cases. Also, if you had any losses that were not compensated by, that were compensated by insurance, public or private grants. And see, that one kind of catches me, because some of the public grants are some of the local small funds. And so you want to make sure that you don't actually use those offset. If you got, say, for example, one of those Great Kern Recovers loan program, or maybe even the Wasco, the City of Wasco program, you don't want to make sure that you use those funds and also claim the same funds against your EIDL. Okay, so lastly, this was kind of a fix. If you are that large amount that is in reconsideration, and I've still talked to a lot of people who are in reconsideration, and really one of the things that keeps coming back is that unverifiable information, and that can be a lot of different things. But one of the leading causes is not having your tax returns verified from the IRS when you signed your 4506-T form. So what could have very well happened is that, you had a change of address, you had a change of entity, you had a change of any type of information that would have been verified differently than what you put down on. So really the toll-free number, the the number for SBA disaster really has been helpful for a lot of people. And I recommend, even now with the potential of $2 million EIDLs coming out and disappearing quickly, which would basically take a lot, if not all the money left in EIDL away, I recommend this done as quickly as possible. The other thing that's unique about what's changing with, what could be changing with EIDL, for those of you that have an EIDL loan, is it's expected to widen eligible expenses. You know, mostly EIDL is for working capital, it's for notes payable, the current portion of your notes payable, and for basically your accounts payable. So it's that working capital, that money that you need to run the business right now. But now borrowers might be able to use the money to pay off any commercial debt, including credit cards and government-backed debts. And previously, you could not do any type of a refinance. You could not do any type of anything. It had to be short-term debt, notes payable, and working capital for proceeds. So we'll keep our eye on that to see if that changes much. It's still time to request an increase in your EIDL loan. Really, the easiest way, you can send the SBA an email, but what I would do is I would log into your SBA loan portal, or do both, and you can click on a box. I believe it's the blue box, and it says increase your EIDL, and then answer the various questions that they have and submit it. That would be the thing I would do first and foremost. I would log into your SBA loan portal, if you have an existing EIDL, to increase that, and click that button to request additional funds. If you had any changes, disclose those, and then submit for their reconsideration. It's funny that we talked about the customer experience, because here we are talking about customer experience with EIDL, and that there was a dramatic improvement, and there was a dramatic improvement in our poll compared to what individuals experienced on a national poll. But also, you know, there's been a number of things that they have done to try to improve customer experience, including having more personnel, accelerating the number of loans, etc. Expected to have that 600,000 backlog cleared by mid-August. It might be cleared, that backlog, but now it is in reconsiderations and some of the others. So that still has not totally happened, I would say. So your California Relief Grant is back. Mentioned that, and we're in round 7, waitlisted applicants from certain previous rounds. So if you were waitlisted before, you're being considered now until September 16th. Nothing is due on your part. Just check your email, see if you get something from Lindustry saying that you have been selected for the California Relief Grant. There'll be additional information that you have to provide in order to finish that. If you did receive an email from them and did not provide any additional grant or any additional grant information, then you need to do that, or potentially yours is just sitting out there incomplete. But there is information. It's just not, you know, the $5,000, $15,000, or $25,000 check is coming in the mail, or actually, I guess it would be transferred into your account online. But you know, it's just not that way anymore. It's you have information that you have to complete and provide an updated information in order to get that. Nonprofit and cultural institutions only have an application window that's open till today. Today is the last day for the nonprofit and cultural institutions, September 8th. And then round 9 will open up, and round 9 could be the last round. It's for new applicants and waitlisted from other rounds. And that will open up tomorrow. So if you did not get in on the California Relief Grant Program, you have a 3-week window starting tomorrow through September 30th with funding available. So consider that as a way to get your California Relief Grant Program through the state of California. If you want more information, our Northern California region of the SBDC program has been doing weekly webinars. They do them in English on Fridays, Mandarin on Thursdays, Spanish on Wednesdays, and Tuesday in Vietnamese. If you know anybody who wants information or more information on that particular program. Okay, those of you that have been around for a little bit, recall this wonderful CSUB generated slide. And yeah, let's look at that. So with our first change in the employee retention credit that happened, well, basically at the end of December 2020, essentially what it did was it renewed the credit through June 30th, had certain eligibility requirements. Last year, there was a cap on 100 employees. It was actually came up to 500. And this was the rule until the stimulus, the American Rescue Plan came out in March or April. So this was what we had talked about for a long time. Now, some of the wages and some of the things that have changed, but a lot of the things are still the same as this thing really continues to change. And then also, this was a slide we shared last time, and I'll show you this slide now because of one of the recent rulings with the IRS. And what these are is these are a number of different tax credit forms that are available to you. There's the work opportunity credit, the employee retention credit that we're talking about now, the empowerment zone employment credit, the Indian employment credit. Really couldn't come up with a better name than that. The credit for employer differential wage payment form 8932, and also the employer credit for paid family and medical leave. So all of those were programs that when in place, they're reduced by the amount of the credit. And so the employee retention tax credit was issued, but there was really no formal declaration that came from the IRS. And remember, it's the IRS that does the tax credits, not the SBA, who does the small business relief programs. So about a month ago, the IRS came out and said that employers must reduce their wage expense to the amount of the ERTC credits received. So if that happened and you received it and you filed your tax return, like probably most people have done by now, because generally that reduction would all occur in the same year. So if you got a fourth quarter ERC and you didn't reduce your credit and you filed your taxes, you're going to probably have to now go back and file an amended tax return. So, the late passage at the very end of the year made it very difficult for employers to reduce the wage expense for ERC on a timely filed basis. And plus, you didn't know what was going on with the employee retention credit. So can see that and can see many. So if you do have that situation, that is something you might want to keep in the back of your head that you might have to, unless there is a legislative fix, it's going to take a fix by Congress in order to either roll that money forward to when you actually will receive it and then offset that employee wage expense this year, or to do it via that amended process. So the other change came out was that for the employee retention credit is if you are a recovery business, and a recovery business is defined as one that started after February 15th, 2020. So you'll realize that many of these pandemic relief programs triggered on February 15th. If you opened your business on, let's say, February 17th, you weren't able to access all of the available programs. You could have opened it in July or December of 2020. And as long as you didn't have annual gross receipts that exceeded $1 million and you were not eligible for the ERTC under the other two categories, which was a full or partial suspension of operations or a decline from 2019 in operations, which really I can't see it being applicable if you weren't in business in 2019. So those are two of the things that came out and two of the guidance that we're starting to get. It's really tough, to really talk about in detail a lot of these programs when they aren't providing you with guidance. And so it's great to have this particular guidance. Plus, I'm punting on this as much as I can. I think it's really something that you really need to work with your tax prepare your tax advisor, your CPA. If your spouse does your taxes, talk to them about it. Or you could even talk to the SBDC. We can give you some limited information on the employee retention credit. So here's kind of just real quickly, under the new guidance, it could be claimed in 2021. You have to carry on that trade or business, and you have to have either had a full or partial suspension, or you have to have a reduction in gross receipts. And we won't define that now, but you had to have that reduction, or that you're that recovery business that we just defined. So employee retention credit issues is right now, from what I understand, is they're taking between 4 and 5 months to process. If any of you have got, I won't even share your name or the fact that you applied. I'd just like to see if somebody has received one of the tax credits from last year. Maybe you filed a Q4 version on an amended 941 form. So I know you got to be out there. You're just not talking to me about it. But anyway, they're 4 to 5 months out. So that's resulted in very few businesses that have received the money for ERC that was part of that tax thing, that tax snafu that I was talking about. Some people have reported, they haven't reported to me, but I've heard from others that they've been paid amounts that are different from what they claimed on their Form 941. And there wasn't really much definition. So if you did actually file for one, or filed for one on Form 941 or a amended Form 941, which is more likely probably, then you could have got a check and it could have been different from the amount that you thought that you were getting. So it kind of makes it difficult to know how much to reduce that wage expense. And see, that's the thing that you got to remember, is that if you have $100,000 in wages, let's say qualified wages, and let's just throw a number out there. Let's say you get $25,000 of advanced tax credit. So you got it actually advanced. It's not a tax against future credits. It's advanced to you right now. Now that 25,000 you will have to reduce. And so that would reduce from 100,000 to 75,000 on your tax return for next year. But you're getting $25,000 essentially in cash for what you're giving up is a $25,000 deduction on your income tax return. You know me, I'll take that trade any day of the week. So that's a little bit more on the ERTC or ERC, however you want to call it. Let's jump in. Got some time left for forgiveness. Let's jump into forgiveness for those of you that want to do this. Remember, this is our timeline that we have used pretty much all year, and that is 24 weeks to use the funds. Up to 24 weeks could be your covered period. You have a 10-month window from the end to calculate your expenditures and get it to your lender. Your lender has 60 days to verify, approve, upload to the SBA portal or their own, or it's going to still go into an SBA portal. And then also 90 days for the SBA to review. So on PPP forgiveness, 10 things to remember. Remember the intent of the Paycheck Protection Program and try to keep it simple. It was really intended for you to keep your employees on the payroll and to provide it that. And really the key step here is going to be to work with your lender on their process for PPP forgiveness, be it the SBA portal, the SBA forgiveness portal, or one that your bank already had in process and is using, or other process. You're going to need to elect your covered period and show expenditures over a period of time up to 24 weeks. And you're going to need to meet or exceed the 60% payroll figure in order to get full 100% full 100% forgiveness. You're going to want to manage your PPP, because we've learned after what we just discussed with your ERC, that if you have payroll protection monies that go for that 40% figure, it's retaining more of a payroll to use against potential tax credits later on. Then you're going to want to select the appropriate form to use. We have 3 forms. Form 3508 is the first form you go to, and if you can actually get it done with the restrictions to the 3508EZ, or you can use 3508S, which is basically available to anyone who has a PPP of 150,000 or less, and only certifications are going to need to be made. But you must make those certifications that you spent the funds, you needed the funds in order because of the COVID-19, and you spent the funds accordingly. And also go back, and if you have any questions, remember if you got a PPP in April, the program changed substantially on June 5th and on December 27th. And also remember, you've got the resources that are there to help you. So let's look just real quickly at some of the forms that are out there. Let's jump and see what we can do here with Google Chrome. And so there is the EIDL. Don't want EIDL right now. Done with EIDL. So here is the first form, and this is the S form. And it's pretty easy contact information. Really, one of the keys to this, and we've seen a lot of problems with people who did not get this first half correct. Either an information error or typo in your contact information, or also the SBA PPP loan number, making sure that you have the lender's loan number correct. There's a lot of digits here, and just missing it by one digit can create a world of problems for you. So then also you need to identify your covered period from when your loan started, and it essentially started on the day that it came into your particular bank account. You can go back to the beginning of your pay period for payroll expenses. You can extend it to the end of a pay period, but essentially it's that if it's 24 weeks, it's 167 days long. The amount that you spend on payroll just goes there, the amount that you're requesting for forgiveness, and then you just have to certify and make your authorized representative that you certify each of these provisions and sign. There's a demographic form. I encourage you to fill it out, but it's up to you. It's page 2, but that is it. If it's 150 or less, it is basically, yes, I use the eligible uses of the PPP proceeds used for payroll, 60%, etc. So that's the S form. If you want the other form, the EZ form, here is the EZ form. And same thing at the top, the information up there. Then it jumps into payroll, non-payroll expenditures. You see we have a 12-page form here. I have an example that kind of abbreviated it, because really payroll costs line 1 for full forgiveness need to be 60%. We'll show you what happens if you don't attain that 60%. But then it could be mortgage interest, it could be lease payments, utilities, some of your covered operations expenditures, property damage, supplier cost, or worker protection expenditures. So what I'll do is, and so there's basically that part of the form. You come up with your forgiveness amount, and there again is your demographic information. And then at the end of all this is where you'll make your certifications and sign under penalty of perjury, I might add. So there's a lot of things that you'll need to initial or sign, read through those, make sure you understand them completely. So here is EZ form right there. Let's jump over here to kind of something we went through maybe last year. But it's our Excel spreadsheet. And what we're doing is an example here, 3 different examples, 1, 2, and 3. What you'll see here is for the items that changed your other business payments, covered payments. I lumped those together just to get it all on basically the same page. But your payroll cost, mortgage, lease, other business expenses, or the other ones will be broken down for items 5 through 8. So the PPP amount here is the first thing we put in. And let's look at 3 situations where you have drastically different payroll costs. Whereas I think it's the goal of everybody is to obtain your 60% of that number, which is right there, 96,000. And we did it in this example. We see that they used 138,000 for payroll cost, easily exceeded the 60%. Used a few other expenditures along the way for rent and other payments and came up to the full 160. On this particular loan, you will get full forgiveness. So actually, you know, it worked out really well here, except for one thing. You're required to have 96,000 in payroll. You had 42,000 in payroll expenses that could have possibly gone for the employee retention credit. So let's use an example of where payroll was less and see what the forgiveness was. So if payroll was less than the 96,000, 60% level, the good thing is it did not harm you too much. While we were waiting for those final rules last year, where it was nail biting time, because many businesses didn't have the payroll to go back to pay, and they had other business expenditures. Maybe they didn't have a very supportive landlord and demanded full lease payments. Maybe they had other payments that they needed to make in order to stay in business, and they needed that. It was more crucial than paying 60% of your entire PPP for employees and payroll. So this one, we just missed it a little bit. 88,812. The other expenditures, sure, the entire 160 was spent, but you'll see the forgiveness amount here is $148,020, which would then yield a loan balance of $11,980. Then our third example is right here, is where, oh boy, you really needed to use it on other items. The business was closed for a considerable amount of time, and it was very difficult to get everything up to speed. I see it, I get it, I've heard it. It's just, it's going to cost you a little bit more in the long run, as you're going to need to make up for that particular difference. So in this case, only 64,000. 2/3 of the $96,000 were used for payroll expenditures. So they needed to pay 60% of 160, which was the 96, and they only got 64,000 of that, as more payments needed to go to lease or rent payments in order to keep their building. And potentially other problems along the way, or maybe things that enhance their business to make them stay in business, or allow them to stay in business. So when we see this, all of a sudden the amount forgiven goes down to 106,667, of which would leave a loan balance of 53,333. Now, that's not too bad. You know, you get $160,000 and you only have to pay back 53,000. You know, it wasn't probably the ideal situation, but if it was needed in order to preserve your business and to put you on more stable footing moving forward, then it was totally, totally worth it. Okay. So a few more things on forgiveness. Did we talk about this? So you can apply for forgiveness once you've spent all the money, or your covered period is done. But you really need to within 10 months, or you have to begin making payments. So on PPP documentation, now on the PPP form, the 3508S form, which doesn't require you to submit any documentation to the SBA or the EZ, it is mandatory that you have this documentation available if you ever get audited. So we're really encouraged borrowers and clients alike to really button this thing up and really get it ready, in case you anticipate having to show it to someone from the SBA or IRS. So then what you need to do to apply for forgiveness is contact your lender. When you contact your lender, what you need to do is find out the process that they want to provide and work with your lender on going through that. It could be through their portal. It could be through the SBA forgiveness portal that we've gone over a few times in the past. Very easy process, a lot of information online. We can guide you back to a webinar about a month ago where we went through it entirely, almost considerably. And so you want to compile your documentation and have your payroll. That's going to be pulling in payroll tax filings, your 941s and your state DEB3s or DE3s and other things like that. Payment receipts, canceled checks, lease statements, etc. You're going to want to do that. And you're going to want to make sure you don't include any eligible payroll that you also went after the employee retention credit. Very important. Can't double dip with the PPP and the ERC either way. And then you apply for forgiveness. Again, a lot of backup that you want to have and have it ready and kind of move along there. Here's some questions that we received in the past. It had to do with the RRF grant, which is now closed. But anyway, I'm sure you have better questions than that. We'll look at your questions and go to them because we're running out of time. Last thing is safe harbor for reducing FTEs. If yours is over 150,000, your PPP, you have to go through the process of either identifying the employees that you brought back that you didn't reduce their pay by 25%. And that you brought them back. Many businesses, not all businesses in California, but many maybe had to reduce their full-time equivalents in their employee level. And what they did was they then were able to actually claim the safe harbor rule because of number one, where you had you weren't able to return to the same level of business. You had a closure. Remember, we had a big closure in the state of California until June 15th of 2021. So that is going to cover a lot of the safe harbors for those of you that have a larger than $150,000 PPP to get forgiven and might have issues with your FTEs. As always, consult your local professional. The Nano Loan Program. Next week, we'll be back with Ken Piquetta with the U.S. Patent and Trademark Office. Should be fascinating. Looking forward to having Ken on. Done stuff with Ken in the past. Always very interesting when you're dealing with intellectual properties. So I am going to stop my share so I can go into my Q&A, and don't have much for Q&A in there. I'm going into the chat. I see that we have some items in the chat. I was having a little bit of problems, so hopefully the audio was good. A lot of resources in here for EIDL loans, for an application for your first EIDL, customer service at SBA. There's that wonderful EIDL call center number, 800-659-2955. Increase in EIDL. The IRS office, if you're having problems verifying your tax returns, take your tax returns to the IRS local office. Get an appointment first. Get a local appointment or a local Bakersfield office. Go in there and have them stamp it off. We've seen it work for clients if you're getting hung up on that. Let's see. Okay, well, don't see a lot of questions in here. Just heard you can't get a ERT for an employee that is also for an owner that is a W-2 employee. Is that correct? That might have changed. With the last revision. I was under the impression, and I am not the expert on ERC, which is why I don't like talking about it. We do have a great video from Michael Stevenson at one of our earlier on our YouTube channel. I get comments about that every single week, including I've already got one this week, about how helpful that was. It might be something now that we're getting more guidance that we maybe need to revisit doing a major revisit on that. But I heard it was 50% for employees that get W-2s. But I am not positive. So I will give you what I think, and I'm hedging very, very, very much. Isn't the ERC 70% up to 10,000? It was different for both years. It is different in 2021 as it was for 20. And a lot of resources in there. And I think that's it. So great being here again. Looking forward to seeing you next week for number 79. You know, who doesn't like number 79? We'll be back with the U.S. Patent and Trade Office, Mr. Ken Takeda, and he'll be answering all your questions on intellectual properties. So that'll wrap it up for today. Everybody have a great week. I'm Kelly Bearden. I'll see you next week. Goodbye, everyone.